Good morning and welcome to the Killik & Co market update. There have been some headlines this week about the number of UK mortgages in arrears rising to an 8-year high, so we thought we'd take a look at some of that data. Given the sharp increase in interest rates since 2021, it's not surprising that more people will be struggling with mortgages. Here's the UK base rate since 2024, just to put that into context. We had over a decade of incredibly low rates following the financial crisis before the more recent increase. However, considering how much rates have risen in just a couple of years, the percentage of mortgages in arrears doesn't look too bad in comparison to the longer-term picture. Here's a chart showing the percentage of mortgages in arrears in the UK over the last 20 years. The percentage was just over 2% before the financial crisis, and then it climbed above 3.5% when the financial crisis happened. In the years since then, there has been a steady decline, and although there certainly has been a rise more recently, the figure is still below 1.5%. One reason for the decline is that banks have been a lot more careful with mortgage lending since the financial crisis. They now take a lot more steps to ensure that mortgages are affordable, and as a result, we've seen quite a big drop in overall mortgage approvals. The chart shows mortgage approvals over 20 years. You can see that banks were approving around 120,000 mortgages per month before the financial crisis, when interest rates were around 5%. Interest rates are back up to where they were at that time, but mortgage approvals are now running at around 60,000 per month, half their previous level. So the implication is that banks are now taking less risk. The European Commission has increased the tariffs it applies to electric vehicles being imported from China. From July, tariffs of up to 38% will be imposed. The justification given was that China unfairly subsidizes its electric vehicle industry. A number of European vehicle manufacturers have actually opposed these new tariffs. They sell a lot of their own vehicles into China, and they now fear that China will retaliate with tariffs of its own. Volkswagen, for example, sells millions of cars in China each year, and the share price has declined as the trading relationship between Europe and China has worsened. Tesco published a trading update this morning saying its market share had increased. Tesco has been trying to offer value with initiatives like its Club Card and its Aldi Price Match. Here's the breakdown of market share in the British supermarket sector for 3 different times. The Tesco share in the dark green was over 30% in 2011. It had fallen to less than 27% by 2019, but it's risen again since then. Aldi and Lidl in the 2 purple shades have come out of nearly nowhere in 2011 to occupy sizable market shares this year. Morrisons, Asda and Sainsbury's in the blue, pink and green have all lost quite a lot of share, so it's impressive that Tesco has managed to keep so much share despite already being so large. Moving on to have a look at next week, we're expecting results out from Accenture. That's it from us. Have a great weekend and we'll see you next Friday.